Today we're going to be talking about 10b5-1 plans. So we'll talk about what they are, who would use them, and why they exist. And then most importantly, thinking about different strategies that you can use whenever you're putting together a 10b5-1 plan. All right, let's get started. So generally, whenever you work at a company, and I guess just a quick thing is that we're talking about public companies, and so we're not talking about private companies. So yeah, whenever you work at a public company, then a lot of times from your equity perspective, from your company stock perspective, that you're actually locked into only certain times whenever you can trade that company stock. And so those are called your trading windows. And whenever you're not in a trading window, then that's called your blackout periods. And the way that it works is that whenever you have your quarterly earnings reports, that'd be after that report that the trading window opens up. Because the logic around that is that whenever the quarterly earnings happen, then your company is publicly saying how they've done in the last quarter. And so then the general public and its employees are working with the same information whenever deciding whether to buy and sell stock. But if you're a higher level executive at the company, then you could be privy to information that could be construed as insider trading, and that this type of structure isn't enough to protect you from that kind of scrutiny. And so that's where a 10b5-1 plan comes into play. So what a 10b5-1 plan is, it's essentially just a written game plan of how you plan on trading your company stock. And so a couple of things about it is that you can only put the 10b5-1 in place in an open trading window. And then you also have to attest that you don't have any sort of insider information whenever you are putting the plan in place. And then another thing is that after you put the plan in place, then there's what they call a cooling off period, which is essentially like a blackout period, where after you put the plan in place, there's an amount of time that you have to wait before you can actually start executing trades. But once the plan is in place, then you can execute trades, and you actually don't have to worry about whether you're in blackout periods or anything like that, because the 10b5-1 is just on autopilot, and it's doing all of your trading for you. So what do you include in a 10b5-1? Well, at a really high level, it's just instructions on the number of shares you'd like to sell, the time that you would want to sell them, and then also if you want to set limits on, say, I only want to sell whenever the stock price hits a certain price point. All right, so now let's go over a few different strategies, and I think the best way of doing that is through an example. So this example that we're using here is that this person is putting a 10b5-1 plan in place, and what they have are 600 shares of stock. They have RSUs that are going to be vesting throughout this time period, and then they have 1,200 non-qualified stock options, and I'm putting that at a $20 strike price. So the first and most straightforward strategy that you could be using, if we're just focusing on the shares, is that you can put a plan in place that just consistently sells a certain number of shares each month. Right? So for example, if this is a plan that goes for 12 months, then we could have 50 shares that are selling every month, and whatever the stock price is, that's what it's going to sell at. Another strategy with the shares is to do something called a ladder strategy. And so that's something where you actually put in different orders, and in those orders you actually set different limits. And so an example of this could be something where with these 600 shares, that you have an order that will trigger at $40, one at $60, and one at $80. And with these orders, you have the date that the order starts, and then when it expires. And so what we can do is we could actually just have all of the orders be active on the first day of the 10b5-1, and that they don't expire until the end of it. And so if we play out that scenario, the way that it would happen is that whenever it goes into place, we're already above 40, so we would have 200 shares that would sell immediately, and then time would go on, and once it goes past 60, then that would trigger another sale of another 200. And then the risk of doing that is that if it never gets above 80, then these other shares might not actually execute anytime during that plan. So one of the advantages of doing that laddering strategy is that you can take advantage if the stock price spikes, that you can trigger sales then. But then on the downside, like I was showing, is that if you actually need the money from this and you have your limit set too high, then you could be leaving some of the money on the table to carry over into the next 10b5-1. Another benefit of the 10b5-1 is if you have RSUs vesting, that you can somewhat put that on autopilot to have a stipulation that says, as the RSUs vest, then go ahead and either sell enough to cover for the taxes or to just liquidate all of them. And since we don't have to worry about trading windows, then if you had RSUs that vested inside of the blackout period, then you don't have to worry about the movement in the stock price and you can just sell it immediately. And let's say in this example that our person has non-qualified stock options, and we can say that maybe for these it's something where you don't absolutely need the money from it, but if the stock price does spike, then you do want to take advantage of it. And so we could put something in place with this to have a target of, hey, if it gets above $80 or $100, then we go ahead and we exercise and immediately sell those non-qualified stock options as well. Another thing to be mindful of whenever you're putting together these 10b5-1s is that a lot of times it's going to cross over multiple calendar years. So thinking of what your tax situation is in the current year and then also the next year. So you might have some orders that will only execute within this calendar year, and then you could have new orders that they can open up into the following calendar year after that. So that's a quick overview of what a 10b5-1 plan is and generally how they work. There's so many different ways that you can design it, as far as using these strategies of more regular sales, laddering, and you can do various combinations of things like that as well. So I definitely recommend reaching out to a financial professional to help you design something like this. Hopefully this was helpful for you. If you have any more questions, then feel free to reach out to me. You can find more information at javawealth.com, and I will talk to you later.